The UK central bank has kept interest rates unchanged at 0.75%, but says it will speed up rate hikes if a successful Brexit deal is secured. Data released on Thursday shows inflation is on the rise, reaching 2.4% last month, and wages are growing at a 9-year high of 3.1%. But economic activity is slowing, with growth in the manufacturing sector dropping to its lowest level in 27 months. Investors are becoming increasingly concerned about the economic impact of the UK's exit from the EU. But the government's reportedly close to striking a deal that will allow UK-based financial service providers to continue operating in the EU after Brexit. Well, for more on this, let's bring in Patrick Minford. He's a Professor of Economics at Cardiff University. Welcome back to the program. So we've seen some encouraging figures on the UK economy, but the Bank of England has chosen to keep rates on hold. What do you think is behind this more cautious approach from the central bank?
Well, the Bank of England has always taken a rather cautious view about Brexit and is keeping its powder dry, really, for whatever comes out of the negotiations. And so that's basically the main reason. The other reason is they think inflation's under control and that it'll pass through. You know, the devaluation is now towards the end of its passing through into inflation. And it isn't too bothered about rising wages. Whether it's right about that, we'll have to see. There is certainly tightness in the labour market now, and wages are now rising faster. So they are on alert to control inflation, that's for sure. They're just really pausing at the moment.
Okay, and we saw the British pound soar today on reports that the UK has managed to secure a deal for continued access to the EU's financial markets after Brexit. Now, if true, this would be a significant achievement for the British Prime Minister Theresa May, who really has struggled with these negotiations. But I'm wondering, why is a deal like this so important?
Well, the problem that the Prime Minister has faced is that she has got herself stuck on the Chequers proposals with goods, which are not doing very well at the moment because they violate the EU single market, and they also give control over the UK's goods market regulations and also across the whole economy to the EU. So that they're in a bad way. But on services, she hasn't proposed anything very deep or close to the EU. Basically, she's proposed equivalence, as far as we know, that there should be just mutual recognition of our service industries being acceptable to the other party. And that's what the Times report says is pretty much agreed. That wouldn't be surprising because really services are not a big issue because the EU needs the City of London pretty much. And the City of London is a leading financial centre and really doesn't need much from the EU. So services are quite an easy end, but we really don't know if these reports are correct. But it isn't unreasonable to suppose they are close on services.
Interesting. And meanwhile, in the Financial Times, there was another report suggesting that France and Italy are offering a very generous tax breaks to London bankers to lure them to their countries after Brexit. This comes amid fears that thousands of jobs in Britain's financial services sector will leave the country after Brexit. Just how bad do you think it might actually be come March next year? Will we see this mass exodus of jobs from the UK?
Well, this has been a long-running saga, and initially they were talking in the terms you've just described of, maybe Paris or Rome or Frankfurt would have a lot of jobs going, maybe 70, 100,000. People talk these numbers. Nowadays, there's no real concern about that because it's clear that if there are any jobs going, there'll be a few thousands, and that's a tiny proportion of the million or so that are employed in the City of London. And the City of London is the leading financial centre in the world, and no one is really much bothered about this. And Rome and Paris really are nowhere in the competition. I mean, they're right down in the lower order of financial centres. So no one's really very bothered about this.
Interesting. Okay, Patrick Minford in Cardiff, thank you again for your time.